Our next caller, Murli, is calling in from Bengaluru. Murli, a very good morning to you. How can we help you?
Very good morning to you and all other panelists and anchors, co-anchors. I bought Pearl Global Industries,
Okay.
500 shares at the rate of 12.90.
Okay.
And the results have come, it seems to be good. And compared to peer comparison, and it's the cheapest stock as well as on ROE basis also, second, very good ROE.
Okay.
Can I hold it? Does Bangladesh import, they have factored Bangladesh and Countermall also, I'm told. Is Bangladesh factory, I don't know who it will affect the curbs import curbs by the Indian government.
Correct.
But generally, if you look at the garment industry is looking back, can I hold it or switch to some other industry like metal industry like Kirloskar Ferrous or Lloyd Metals,
Okay.
which also have a good future prospects considering their backward integration of mine.
Okay, got your point, Murli. You've always been, at your A-level game when it comes to research. So we really appreciate that, Murli. I'll take this up with Rajesh. Rajesh, Pearl Global is the company, and as Murli rightly pointed out, right now India has the Bangladesh +1 strategy, plus the UK FTA might also be positive in terms of Pearl Global. What's the outlook like? And if not this counter, then should he shift to something like a metal, something in the metal space? And if yes, what should be the counter?
See, there are two different sectors we are talking about. One is Pearl Global, which is into textiles and garments, I would say, and Bangladesh factor is, yes, it's playing out. FTA, UK FTA is also playing out. But as far as the Pearl Global is concerned, I think the valuations are on the higher side at 1,300 rupees. Much of upside is not seen fundamentally. Due to market condition or news flow, it may go up to 1,400, 1,350, 1,400, but that would be a long call to take. It's better to book out at these levels. If you want to be in textile to take benefit of, Bangladesh and UK FTA, the better names in the sector, I would say, Vardhaman Textiles being the best. So you can have a look at Arvind. These are two in the textile space. But if you talk of metals is governed more by China factor, and there are news flows coming in that China might go for a stimulus. I don't know whether that is true or not, but if that comes true, metals would be on fire for a short term. Otherwise, also metals are in good demand. Companies are doing well. Numbers have been decent, I would say, with the exception of one or two companies. And they have done capex with the kind of infrastructure focus of the government. I think metals are going to do well, out of which I would like to recommend either a Hindalco or a Jindal Steel and Power in the large cap space. In the mid cap, you can have a look at Lloyd Metal.
Okay, all right. And incidentally, that's exactly what Murli was asking about. Lloyd's Metal was one of the counters that he pointed out. Sell is a call based on the way that it's run up. Pearl Global is what I'm talking about, of course. By the way, we spoke with the management immediately after that UK FTA was signed, and they had indicated that they are moving a certain amount of production to India to benefit from the tailwinds that will come through from the UK FTA. The next question